Hi guys, welcome to Traders Talk. And today is Tuesday and we are live. All right, great. If you can hear me, give me a thumbs up. Let me just check. Yeah, if you can hear me, give me a thumbs up so that we can actually start this session. Yeah. So this is a session where we actually talk about the markets, about the stock market, and is the computer lagging? Okay, all right. Okay, we'll talk about the stock market and also we will share a bit more on trading, how to actually trade the markets using options. Yeah, so this is the core of our show where we actually share and teach people more about trading and options. Yep. Okay, so we had a very good run last week also. Yeah, we had a very good run and the market is actually continuing its bullish momentum. Yeah, let's just check. Yeah, and I think that has been for the past more than a month actually, where we are actually seeing the market going to its higher highs, yeah, and that is actually a good sign for the market and also investors, yeah, because we had a very bad half year, and now that it is actually going up, it is actually very good to us, and in fact, our portfolio has also improved over the past 1.5 months. Let's just get a bit on the market for the S&P 500 and also Nasdaq. We'll just go through that. Let's just share the screen here. Where is it? Share the screen here. Okay. SPX. Okay, so this is the S&P 500, right? And of course, you can see that since the 16th of June, right? Since 16th of June, we have been actually having an uptrend in the markets. Let me put the screen bigger. Okay, so this is better, much better. Okay, so since 16th of June here, where we have actually so-called so far reached the bottom here, and we have actually rallied by quite a bit since then for the overall market, and we have actually gone back up all the way to the highest of yesterday, about 15%. Yeah, to the highest of yesterday of about 15%. This is for the S&P 500. And of course, from the all-time high to the lows, we have actually gone down by more than by about 32%, by about 32%. And we are now back up about 15%. So we are almost halfway of what we have actually lost since January this year, and we are actually at the half mark. And of course, where do we actually expect to go from now? I mean, as far as the price action is concerned right now, we are actually still looking for the further recovery up. But of course, up to the past few days, we start to actually see some form of resistance at this level, Yeah, if you can actually see, this was actually the previous high, and this actually reached a point of about 4177. Let's put it about 4200. Yeah. So at this level, basically, we start to actually see some resistance, and of course, today itself, we also expect that the market to continue to actually do a bit of a retracement, mainly because on Wednesday itself, we are actually going to announce the July CPI. Yeah, the inflation rates is actually going to be announced on Wednesday. So we expect the market to have risk on today. In fact, it actually started off yesterday, where you actually see beginning of the trading hours, we have actually we actually opened up positive, right? We actually opened up positive, but actually throughout the day after the second or third hour of the trading, we actually see that the price actually started to come down. Yeah, and I would expect this to continue. But of course, post that, what would likely be the outcome of the CPI, right? I mean, for me personally, my personal opinion based on the data and statistics we see so far, right? We would actually expect the CPI to actually taper down a bit for the month of July, which will be reported tomorrow. Yeah. So the last round June inflation was reported at 9.1%. So we expect that this coming round would actually be lower than 9.1%. Of course, when that happens, what is the market? What will be the market reaction? Of course, that is actually positive news to the market, right? Where one of the key things which the Fed, right, the Federal Reserve of the US try to actually combat through all these rate hikes is actually to ensure that inflation actually comes down. That's why they are actually hiking the rate so that people actually spend less. Yeah. So that would actually give a push a bit more for the market, and of course post that hopefully the market would actually breach this 4,200 level to actually go back higher. Then of course the next threshold which we need to move past is actually this 4,003 point. Yeah, so we are actually going step by step, and this is actually normal for the market to actually move, whether it's actually moving up or moving down step by step. And if you can actually look at the patterns where the market moves, right, it actually always moves in wave pattern. Yeah, so wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, and wave up, hopefully. Yeah. Okay, so the market actually moves in waves, and this is actually up wave. And of course during this time here is actually a wave down, wave down, wave up, 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 and so on. Yeah, so this is the normal pattern, and this is also what we call a healthy pattern for the market to actually move. A healthy pattern where it don't go up in a straight line. Yeah, so the thing is, when the market actually goes up in a straight line, then that is the time where you need to actually be a bit careful. Yeah, because these are what we call parabolic moves. Yeah, that means moves which are actually quite steep, Like for example, this can be considered as a steep decline, and where else we can actually find a steep up. Yeah, this also can be considered a steep up. Yeah, steep up. You can see all these candles are actually very, very long and very steep up, huge long candles. Yeah, all these are what we call flush up. And of course, when we see this kind of patterns, highly likely these are the times where we need to be careful. Yeah, of course, when it actually flushes up, parabolic up like this, that is the time where it might actually come down. And when it actually flushes down like this is the time when the market makers make their so-called last squeeze to the market, to actually squeeze the market and make people panic and sell more before they actually push the market up. Yeah, so it can work both ways. It can flush up, which indicates signs of top, and then it can also flush down, which indicates signs of bottom. So that's why you saw this very big flush down together with all these gap downs, right? when it actually so-called bottom out on the 16th of June last month, 2 months ago. Yeah, and from there on, the market healthily retraced back up by about 15%. Yeah. So this is the S&P, and these are the price actions which you actually need to look at and consider whether you are investing or whether you are trading. Of course, if you are investing, hopefully you have actually put in some positions when it was actually coming down, and of course now, since it is actually halfway above, then of course this may not be the best time for you to buy into your long-term investments. Yeah, but of course, if you are actually trading, then these are actually a totally different kind of ball game, where you can actually trade either direction. Yeah. On the longer term, is actually a bullish short-term signal. Because the 20 moving average has actually crossed the 50, indicating a short-term bullish, short-term uptrend. Yeah, and of course, this 20 is trying to cross all these barriers. Right, this is 100, and this is the 200. Yeah. And of course, once the price reaches and touches back 200, then of course this is another significant level for us to actually see whether it's actually strong enough to actually burst through back to its all-time high, which was at 4,800 level here. Yeah. So this is where the market is right now, and basically what you should actually look out for in the coming days or coming weeks. Yeah. So this is S&P, and the other one which we actually track is the Nasdaq, right? Nasdaq. And the X. If you have comments, just put there. Yeah. Hi, Dave. Hi. Good evening. For the Singaporeans, happy Independence Day. Today is actually their national day, right? So I think you guys are having a holiday, and happy National Day for all the Singaporeans out there. And I think we have a big bunch of Singaporeans who actually watch these shows. And for the Malaysians, be patient. Wait another 2 or 3 weeks. Then it is our time to celebrate our National Day. Okay, so on the Nasdaq side, here we are. The chart patterns is actually more or less similar, where we so-called bottom out on the 16th of June, and then from there on, basically the market had actually reversed on a short-term uptrend, and of course the Nasdaq movement is actually much bigger than the S&P, mainly of course also because during the drop, it had actually also dropped more than the S&P, from all-time high to the lows. Basically it has actually dropped 34%. Yeah, 34%. Yeah. And right now it has also more or less recovered. How much have it recovered? It has actually recovered maybe about 18%. Yeah, 18%. Slight 18%, almost about half also. Like, yeah. At the midpoint, it cannot be 34%. I thought it was actually more. Yeah, 34% down. Yeah. It is actually now at midpoint here. Yeah, and of course, yesterday itself, you can actually see that the retrace a bit by about close to 50 points, and again, you can actually see that facing a bit of resistance at this level, about 13,300, yeah, and that is actually on Nasdaq. And where do we see it coming through again? This might be one level, 13,500 over, 13,585, one level, and the next one, of course, we want to actually see it coming back to the 200 moving average, yeah. And for the Nasdaq, it went up a bit fast also, mainly of course because of the double 75 basis point hike in the past two rate hike, right? And of course, the expectation for such kind of 75 basis point hike would not come in the next run rate hike in September. Yeah, that they probably expect it to actually taper down to 50 basis point as on the, which is the on the high side, and no more 75 basis points. So that actually gave a bit of relief to the Nasdaq counters, which are actually more sensitive to the interest rates. Yeah. Okay, so these are the level right now, and the futures is red. I'm not sure if I can actually access futures here. Let me see. Let me check on the phone, maybe Yahoo, maybe Yahoo. If you look at the index here, right, here is actually down by 70 points already. Yeah. So the, can you see? Yeah. Let me see. The futures, Nasdaq futures is actually down by 70 points. And the S&P futures is actually down by close to 10 points. Yeah. So expect rate today, mainly also because of the CPI, which is actually coming out on Wednesday itself. I think it's in the morning before market opens. Okay, so let's check Forex Factory here. Forex Factory. I mean, Forex Factory. I mean, we have already gone through this, right? It's actually one site where we actually look at the events which might affect the market. Yeah, so this is actually one very good site where it gives all the event on all currencies. Yeah, so if you are trading any markets worldwide, right, this is actually the site which you can actually see. That's why you see 8:30 p.m. Which is the Malaysia time or Singapore time, right? Asian time, right? That is actually the CPI, and market opens at 9:30 p.m. Yeah. So the if you are trading futures, then of course you can trade on this news. You can actually trade on this news. And of course, if you are only trading the stock market, the stock market, then of course this would be an opening event for the market, whether bullish or bearish. It depends on what is the outcome of the CPI to be announced tomorrow. Yeah. Okay, so let's look at the today. I mean, if you have any special topics, let me know on the chats so that I can actually answer them. Otherwise, I'm basically only covering today on the. Wait. Okay. Yeah. If you have any special topic, put on the chat. Otherwise, I will just cover the general market situation, which I have actually done, and probably run through some of the stocks at the moment. Yeah, some of the key stocks which we monitor in our portfolio for the moment. Yeah. Then let's go back here. Okay, let's go back here and let me see this. Okay, I just suddenly open up too many screens. Okay, let me close this. Hopefully I don't cut you guys off. Okay. Okay, now we are back. Okay, so we'll just cover some stocks. Let's go back to the here. Maybe we'll look at the overall thing first. What site is that? Let's go to our watch list. Yeah. I mean, Apple very strong rally here, very strong rally from $130 all the way almost back to its all-time high of 180. Currently, it's actually went up to all the way up to 168. Yeah, of course, the announcement, earnings announcement also was actually positive for Apple. And of course, right now today itself, you can actually see some retracement. Yesterday, in fact, Apple actually went up, but like I said, the market has actually retraced after about 1 or 2 hours of opening time. Yeah. And today itself, you can actually also see that the pre-market Apple is also expecting to come down. Yeah. So after a healthy rally, it is not uncommon to actually see some form of retracements. Yeah, some form of retracements. That's why in the last weeks, right? That's why in the last in the last weeks, we had focused on a bit more options trade structures that are bullish and also at the same time take also the opportunities of bearish movements, which means all these kind of shallow retracements. Yeah, that's why we actually did some information or training on diagonals. Yeah, because on diagonals there is actually two legs to the trade, right? One is a long call and then one is a short call, right? Yeah. So this is actually a longer dated long dated. This is actually a short dated expiry. Yeah. So the long call, which is actually a longer dated expiry, we want the stock to actually go up, right? Yeah. Whereas on the short call side, we actually want the stock to actually come down so that we can actually earn the premium from selling this short call. Yeah. So when we do trades like diagonals, right, what we actually want is that say for example, when the stock is actually at the bottom here, right, coming to a bottom, yeah, you can buy it at the bottom. If you don't get the bottom, it's also fine. You actually can actually enter into such a trade. Yeah. So for example, if you actually enter at the bottom here, you buy a long call at a strike below this price, right? About 80 delta. You can refer back to the past shows. We did say that for diagonal, the long dated long call, do it at 80. And then, of course, on the short call, you can actually do it at the expected move of the trade for the duration which you are selling it. If you are selling it for a week, then you can actually use the expected move for the expiry to actually sell the choose the stock price where you actually want to sell the short call. Yeah. You can do it for weekly premium, monthly premium. It is also fine. But on the long call side, choose expiry no less than 90 days. Yeah. So what we actually want to benefit is a movement up during the time, right? And also and also a retracement. Yeah. So that when if you are selling the short calls at a higher price, right, above this price here, we want it to actually come down to expire out of money. Yeah. And of course, once that expires, then you go through another round of the share going up, and then you want to sell another call at a higher price, and it comes on a retracement. You expire out of money, it goes up again. You do the same process over again. Yeah. So if you're doing it for short term weekly, then of course you would want this what is that? More how to say, more up and down, up and down, up and down movements for the stocks to actually get the best out of the short call premium, to ensure that it expires out of money. Yeah. And of course, we also covered in our newsletter this week, right? On rollings, yeah, on rollings. What is rolling is basically closing the previous position and opening a new one, and basically rolling would entail rolling of the short call. Yeah. So on the long call, we don't touch it. On the short calls, we will actually need to manage it depending on the price action. Yeah. And of course, one of the key objectives for us to roll the trades in the diagonal, roll the short calls in the diagonal, is to actually get additional premium. Yeah, get additional premium, to earn additional premium when the price is actually retracing, coming down. We want to actually ensure that we squeeze all the premium out of the short call and expire worthless. Yeah, so that's one. And of course, the rolling period, like I said, it can be weekly, it can be also monthly. Yeah, and of course, the target premium which we actually want to get is plus minus 0.5% for weekly, and if you are actually doing monthly, we actually want to target plus minus 2%. And this percent is actually based on the strike price, which you are actually selling it for. Yeah. So for example, if you're selling at $100, then the weekly premium you actually expect to earn 50 cents or $50. Yeah. Okay. And the other one, of course, the more complicated trade management is actually when the strike goes in the money. Yeah, because we will benefit if the short call expires out of money, right? But there are certain times, especially let's say like right now, maybe the bullish momentum is actually much stronger for the stocks. It actually should pass your short call strike. Yep. So when it actually should pass your short call strike, what should you do? Yeah, what should you do? And what you do would also depends on how you structure out your short call, how you actually structure out your short call. And of course, when we are actually doing diagonals, right, the best position, right, best position for us to actually sell the short call, you actually need to look for a risk profile like this, when you actually do the short call selling. So what this risk profile actually shows is, maybe I put it bigger. Okay, what this risk profile shows is that this is actually the short call. Yeah, your long call is say at 110. Current market price is actually at 117, for example. Yeah, this was actually done based on Google example. Yeah, so the long call, longer dated call is 110, and now you're actually selling a short call. You sold a short call at 115, and suddenly the market price actually went above this price, and this will actually be how your risk profile looks like at this point in time. But of course, let's say when you structure it out, let's say the market price was actually at say 112, for example, at 112 here, and you sold it at 115, your risk profile will also look like this. Your risk profile will also look like this. Yeah. So this is actually the best one. Why I say this is actually the best one is because when you structure it like this, right, even though the market price goes in the money from the short strike, right, you would not have a upside risk. That means you would not make a loss. At least you will not make a loss, okay? Because if you look at this curve, what happens to this curve is that, beyond your strike of 115, this is your max profit level. Your max profit is actually sitting here if it is at 115. But of course, if it goes beyond 115, that means in the money for the short call, the profitability of the trade will actually reduce. Why it reduces? Very simple. Okay, when you go in the money for the short strike, right, this short strike will actually lose money. For example, if you actually sold this short strike for $100, okay, when it was actually 110, you collected $100. When the share price moves to 117, the price for this option will actually go above $100, which might say go to $150, for example. So when it goes to 150, you sold it for 100, and now it is actually at 150. Means that you will actually lose $50 on your short call. You will be losing money. Yeah. Okay. But the other thing is, you don't forget you actually have this long call here. And this long call, if the price goes up, this long call value will actually go up. Yeah. So that's why that profit coming out from this long call would actually offset some of the losses from this short call. Yeah. For example, the long call might increase, make a profit of say $30, for example. Yeah, $30. But the short call might actually lose 50. So net, the trade will actually reduce profit by $20. That's why you actually see this curve coming down. Yeah, that is actually causing the profitability of the trade to reduce. Yeah, but at the end of the day, even if the price shoots to $160 here, right, if you have this kind of risk profile, you don't have to worry if it goes deeply in the money, because you will still make profits. You can actually see this line taper down, and it actually reaches a flat line all the way to this level, which will say you will still make a profit of about $370 or $380, even if the strike price goes to 160 or above. Yeah. So this kind of scenario with this kind of risk profile, you if you can structure it like this is the best kind of so-called strike price for you to actually choose. And if it goes in the money, don't worry. Wait for it to expire. Wait for this 115 to expire. Just keep the trade on until close to expiry or the day of expiry. Roll the trade over. Roll the trade over. You can roll it at strike 115. Also possible, and you can continue to actually earn premium. Yeah, just make sure when you roll, you can still structure out a line like this. If you can't, then you have to be a bit careful on how to actually manage, and also need to take care of the price action of the stock price. Yeah, because at the end of the day, your target is still for it to expire worthless, not expire below your short call strike. Yeah, and that can be in this scenario. Yeah. The second scenario is, of course, when you structure out a trade like this, this is actually a bit more dangerous, because if the share price, right, if the share price move above this level, which is about 117, 118, right, then you actually start to make losses. Yeah. So this is a more dangerous structure for you to take care. If you structure out a diagonal like this, you need to actually make sure that the price continues to be trade below 117 in this example. Yeah, trade below this 117. And if it goes above, you will start to lose money. Yeah, but even if you are starting to lose money, I mean, it does not necessarily how to say, make you or you may not necessarily exit the trade if you feel that the price of the shares might be overbought, and eventually you expect the price to actually come back down, then you can continue to manage the trade by rolling at the similar strike previously. Hopefully that the price will actually come back down to this level or below. That is also some form of trade management which you can actually do. Objective is very simple. Target is to make sure it expires out of money. If it does not expire out of money, look at which risk profile you have. If you have this risk profile in example 1, you don't have to worry that much. If you have a risk profile in example 2, you need to take care your position, in case there is the price action does not seem that it will actually come back down, then of course it might be better for you to exit with a break even or a small loss in such a situation. So this was the diagonal, and why I say this current market. I mean, personally, I do trade on both sides right now because of the volatility. When it's bullish, I gain. When it is bearish, I would also gain in the trades. So these are the two ways where I can actually profit. Not only one direction, in both direction I can profit in the same trade. So if you look at many stocks, is also similar price action. It goes up, it goes down, it goes up, it goes down. Okay, so a lot of the stocks are actually reaching topish level, reaching all the previous high, where you can actually see that the stocks are a bit tired after the rallies, right? It's actually a bit tired. It can't even touch back the all the previous highs, right? It can't even touch back. It is already starting to actually come down. But again, tomorrow is an important day. And of course, if it can actually push the market and the stocks actually comes up, then these are the levels which you actually need to monitor. These are the levels. So for example, Visa 218 is a level for you to monitor whether it can actually breach above 218. If it does not breach above 218, then it forms a double top, right? It forms a double top. If it is bearish indicators coming down here, closing below 218, then of course there may be potential for you to actually go short short term. Don't go short long term. Go short, take quick short trades for it to actually take the retracement down breather. Or of course, if you actually want to be a bit safe, then take what is that? Take a bear call spread, where you have a bit more buffer. But be careful. We are still on a short-term uptrend. If you are actually taking trades like bear call spread, we might not last long enough for the trade to actually expire. Wait until it expire worthless. You might not be able to wait until then. So if you are doing credit spreads on the bear side, exit earlier. Don't wait until the conventional 50% profit. If you are already in 20 or 30% profit within a short span, right, within 1 or 2 days, if you can actually get 20 to 30% of the premium you sold, right, exit the trade, take the profit and run. You say, don't wait. If it is on the other side of it, if you are taking a bullish trade, what is that? a bull call a bull put spread, right? A bull put spread, then it's different. You can actually hold the trade longer. It's fine, but right now we can't take this type of trades because we are already on the top. You need to actually wait for bigger retracement to actually for it to come down before you can actually do bullish credit spread. Yeah. Let's check any questions. Okay, no questions. Okay, so PayPal had a very positive earnings. Yeah, you can actually see that it actually get back up. I think about 10% up post earnings. Yeah, it came all the way down from $180, if not mistaken. PayPal. So still cannot see. No, 200 something, 280, not 180. I forgot 280. It came all the way down 280. Now trading at close to 100. Yeah, PayPal. Mastercard similar to Visa. Yeah, is actually reaching. These are the levels which you actually need to watch out. Baba, China shooting too many missiles over to the Taiwan Straits, right? So over the since after the news on the putting it on the delisting list, right? Potential delisting list, right? It has actually came down, and because also over the past few days of the China, Taiwan, and the US escalation because of Pelosi landing is her foot on Taiwan, right? So these are actually not so like upon on by the Chinese government, and of course the US government is trying to also propagate all these kind of things again with Taiwan sitting in the middle. Yep. So again, for the past few days, Baba has actually came down, and I think it's very unlucky for these stocks. Like it can never go back, turn around. Like it can actually never turn around. It can, even if you look at this, where it actually went above. No, this was actually what this was actually the 20, right? The 20 went over the 50, went over the 100. Yeah, but after that, it also touched 200, right? And it actually came back all the way down. So this was Baba. JD is also the same. Yeah, JD is also the same. Okay, JD, I am actually keeping an eye on JD. I mean, as compared to Baba and JD, I prefer to trade more on JD. Yeah, so I'm keeping an eye on JD. Yeah, and of course there are risks. We do not know. I mean, I think the missile has stopped shooting, right? Yeah, but we do not know over the next few days what kind of things will still war of mouth will still happen between the countries, right? So yeah, but because the price for JD is actually much lower, there may be a bit more, how to say, less risk or opportunity to actually trade JD as compared to Baba. I prefer this more. Yeah, because you see, it's actually again coming down to this level of about 56, right? 56. Yeah. 56. If it comes back down to this level, I might actually start to take on maybe a bull put spread, or even a synthetic, like even a synthetic synthetic stock. Yeah, synthetic stock. Maybe next time I actually teach you guys how to structure our synthetic stock, which is basically mirror stock, basically using an option structure to mirror 100 deltas of the stock. Yeah, there may be short-term trade potential. Yeah, if it comes back down here, then we might do a long position. Yeah, but let's see over the next few days if it does come down. If it don't come down, I won't take. I was tempted to take yesterday, but I didn't because I felt maybe it can actually come down more. Yeah, even today, see, it's actually pre-market 50 points down. Yeah, maybe after today. Yeah, maybe after today, if the market actually comes down a lot, potentially this might be one, so that if tomorrow rallies based on positive news, then this might be something which will flow back up. Yeah, I mean, these are just my personal view, not recommendation to trade or anything like that. Yeah, so just sharing with you how I actually look at these stocks, and also based on the price action, what type of trades we can actually structure out. Yeah. So we're looking more on the price action. Yeah, price action. And of course, the other things is earnings is actually coming, right? So far, all the internet stocks has also done quite e-commerce stocks has also done quite well over the past earnings. Amazon and all is actually better than the previous earnings, or not as bad as what they actually expected or announced in the previous round. Yeah. So Google is coming down. Yeah, coming down. Although it is actually at the topish here, right? You can actually see that it formed a double top. But yeah, so this is actually a bearish indicator, bearish indicator. Yep. So I would say short-term bearish. So that's why, I mean, I do not expect it to actually come down strongly. Mainly, you can actually see here. Yeah, here might form a support at 112 level. Yeah, and also mainly because if the news is positive and the market rallies back, right? So all these are actually again short-term retracement. We might not retrace so much because there's no real no real negative sentiment right now to actually make it drop by 10 or 15% back to its lows. Yeah. So this kind of trade, yeah, diagonal is one which I entered yesterday itself, one diagonal. So after today itself, that means after today, I might drop off the short call. Yeah, because remember the diagonal is a short call plus the long call. Yeah, long call you do it at 80 delta. I think I did it at 100 if not mistaken. Yeah, 100 strike for the long call, and the short one probably at 120 if not mistaken. Yeah, 120. So if the price comes down today, I might close off the short call. That means I earn the premium over the past 2 days. Yeah, I might leave off the short call. And why I leave off the short call, which means that I am only left with the long call. And of course, why I do that is I expect Google to actually rebounds. Yeah, and of course, when it rebounds, to take more on the upside if I only have the long call on the trade. Yeah, and once the share price goes up, then I can sell the short call again. Yep. So again, trading is a bit dynamic. Even if you actually enter into one option structure like a diagonal, depending on how the price action of the stock goes, you can convert it just purely into a pure single leg option trade, which is a call. Or you then when the price action is suitable again, then you can actually load it back and convert it into a into a diagonal. I mean, there are many structures you can actually do for the trade. Yeah, you can even add on additional legs or to the trade on a vertical spread, bullish or bearish. You can also do that. Yeah, so it is not cast in stone that if you buy it, then you just hold it. You can how to say, mutate it into many forms. Yeah, so that is the great thing about options. How's with time? Okay, we just have another few minutes. Yeah. So any questions? No questions. Let me just check. Okay, so no no question. Okay, good. So I mean, these are some of the stocks. Meta has quite a good run up again from its lows. Yeah. So again, all the good stocks, you can actually see that it reaches quite strong support levels at certain price. Yeah, strong support levels. You can see for this. There is actually 1, 2, 3, 4. Yeah, at this 153, 54 level. Yeah. Goldman Sachs, I think all the bank stocks have suddenly rallied over the past, especially past few days, it rallied. Yeah, all the bank stocks continuing. Yeah. JP Morgan also had a big jump 2 days. This was last Friday, right? Last Friday. Yeah. But you can see again some resistance at this level. Citibank, nothing much, going sideways. CI, Cigna, the healthcare and the health insurance companies have all jumped by quite a lot after its earnings. Yeah, not only Cigna, you can actually see the other healthcare stocks. What was that already? CI. I think CH also here. Yeah, earnings is coming. I think Friday, if not mistaken, earnings. Yeah, I would expect uh better earnings on all these stocks. Yeah, healthcare insurance. Yeah, UNH moving a bit topish sideways here. Yeah. Yum China quite strong over the past weeks. Yeah. Starbucks is also topish, if not topish. Yeah. So this level. McDonald's, PLTR, quite bad earnings yesterday, right? Quite unexpected because before earnings, again, don't believe the news lah. Yeah, remember before earnings, they were putting up releases to say that PLTR might be doing better and all, and because of that, of course, the price have actually rallied by quite a lot. But post when they actually did earnings, then of course they announced that they are going to get lesser government revenues, and because of that, the price have actually gone down by I think 10%, 14% yesterday, 14% yesterday. Yeah, but overall, it has actually gone back up by close to up to this point by close to 80% from its low. Yeah, so of course, if you are speculating, of course, these are the stocks which really bottom. I mean, it's like going to like dirt cheap, right? I mean, this came down from all the way, I think about 40, 20, $30. Yeah, until it's dirt cheap, right? But of course, their risk, of course, now is dirt cheap. You risk only $600, right? If you actually buy 100 of these shares, and of course, when it went up to 11, then basically there's there's like 100, close to 100% returns. Yeah, in just about 2 months. Yeah, so these are more speculative in nature. Yeah, be a bit careful if you are trading such type of shares. GDRX, quite good earnings today. Yeah, I think was it yesterday? I think yesterday they announced earnings. Yeah, so it popped about $3 or $4. Pop about $3 or $4. Yeah, I'm holding this lah. I mean, I have how to say, I have this converted into I have these shares. Yeah, I'm holding shares. Yeah, because you see it came down all the way from 45 all the way down, right? Yeah. So again, same speculative time. Yeah, you see it bottom up at about $4, $5, $6, right? and went sideways, and suddenly it popped $4. Or again, huge jump. Yeah, huge jump. BA, XBI, yeah, XBI had a big rally up for the past week, yeah. So again, the healthcare and the medical pharmaceuticals have gone up. SoFi, yeah, don't this, maybe not this one lah. Don't touch this there. It has already gone up anyway. Yeah, so it went down all the way to about $4. So what time? Okay, it's 8:30. Twitter, yeah, Twitter is has been having a quite good run there. And now you can actually see it's at $43. I think the shareholders meeting to approve the takeover by Elon Musk is in September, mid of September, if not mistaken, mid of September. Yeah. Although Elon Musk says that he's exiting that thing, right? I mean, Twitter is continuing to pursue him to actually buy out the company. And of course, if this is actually approved, right, that will give further upside to the stock, despite challenges on Elon's side to say that he is not obligated to actually buy the company. Yeah. SQ, yeah. Is it all the previous stocks on the tech side has had some good runs since the past month. Yeah, Amazon. We went through last week on Amazon. Yeah, Nike. Yeah, Nike again. It's going sideways right now. Yeah, it's going sideways right now. So again, best time diagonals on this is also a good candidate. Yeah, good support at 100 level. Yeah, good support at 100 level. And if it can slowly go up, is even better for the diagonal trade. Yeah. J&J came down over the last few days. Yeah. Okay. Yeah. So I mean, if I want to cover, there's a lot. No, maybe not this finishing my watch list. Adobe again, topish. XLF banking stocks same as the Goldman Sachs, JPM, up fund, yeah, bottom out again here. Bridge previous is going on its higher high lah. This you see, yeah. These are native of the tech stocks. These patterns where they're breaching previous resistance level. Yeah. Teladoc, bad earnings. Yeah. Synaptics has also came down by quite a lot. Yeah. Slowly inching up. Yeah. Synaptics. These are Hong Kong stocks coming down. Continue to actually come down. Yeah. Hong Kong stocks. Okay. All right. So that's a lot which I have actually said today. Let me go back. There's a lot that I've said today, and of course, hope that the short-term retracements come today, so that we can actually go back on higher highs. Yeah. If the retracement don't come, right, it will make us a bit more scared that when will they actually come. I mean, that means if they retrace a bit, they go up, right, then that's healthy. If they continue to go up day on day, right, then it's also quite scary, because you would not know when is the next time it will actually just suddenly pop down by many points. Yeah. So okay, yeah, again, if you're trading the market, my advice would still be the same. Yeah. Take profits when you get some, and then re-enter new positions. Is always okay to do that, rather than to continue to hold on positions, hoping that that particular trade can actually make profit for you every day. Yeah, because when market changes, it can actually change very fast. So that's the thing. That's the thing which we have been practicing for the past many months. Yeah, to actually go in and out of trades. Yeah. One question from Andy: if holding stocks that fell 50, should I do a sell call long duration? Okay. How to say? If it has dropped by 50%, that means any calls which you are actually selling, right? You are actually going to sell it below your cost, below your cost. Of course, the stocks are, if it is actually a strong strong stocks, right? A strong stocks. Eventually, hopefully one time, I mean, it can be 1 year or whatever, it might actually go back up to above your cost. But in the meantime, if you actually want to make some premiums out of it, right? I would not do a long dated. I would not do a long dated price, long dated lah. Yeah, because it, how to say, you might not get also so much premium out of selling long dated call. And of course, price wise, you do not know how to say, whether it can go up very fast or it can continue to actually come down, where of course that will also affect your so-called long position on the stock, whether you want to exceed it, or you actually how want to cut loss or what. Yeah. So if you want to sell, I mean, my advice is watch on your cost. If you do not mind to actually so-called take it as a loss lah. You only sell it when the stock is actually at least oversold position lah. Yeah, that means basically you only do it when the price is actually overbought. Sorry, overbought. Yeah, overbought. Yeah, every time when the price is actually overbought, you sell higher price call, and you try to actually earn from the so-called retracement from the stock price. Yeah, stock price. But there are risks that, of course, if the price goes above very quickly, above your short call, then you will not get the upside of the long call, your long position. That means your stock might be called away. So that's the risk which you will take. And again, if you can actually structure out, you refer back to the structure which I've actually shown you, the risk profile, uh, to ensure that you won't lose money if the price goes beyond certain level. So at worst, they will take off your share. You will exit it at the strike price which you sold the call. Yeah. But you might not lose more money. So that is the thing which you actually need to consider. Yeah, you can, but please consider that. Yeah. Okay. Yeah. I also understand that it's a bit painful. I mean, if you're holding stock which is a bit 50%, right, down, right, then again, at which point will you continue to hold, or you can actually earn back some premium? But before it actually fell to 50% down, right? I mean, of course, you also need to consider how to say, uh, uh, what is the level where before it went down. I mean, what is the level where you should actually cut your loss? Yeah, you should actually cut your loss. I mean, if you set a level of any investment or anything, a level that you need to actually cut loss, whether it's 10%, 20%, yeah, then of course you would not reach that 50% level down. Yeah, that is the thing. I mean, don't be sentimental on the stocks which you hold. Yeah. I mean, these are just stocks you can actually buy and sell it anytime. So we are never sentimental to our stocks. Yeah. So set a threshold, and of course, if you set a threshold, then hopefully you won't experience this 50% level in the future. Yeah. Okay, so that's all. I hope I have actually answered you, Andy. And I mean, yeah, if you have all these practical questions, just pop it up during our shows, and we will actually go through them. Hopefully, can give you a bit of guidance of how we actually manage such a situation. Yeah. Okay. All right. Thanks, Dave, for joining us. So, all right. Have a good trading week. Yeah. And hope for higher highs for the market. Yeah. All right. See you. Bye bye.